Well, hello. Today is Monday, October 25th, and I am at home. I got COVID last week, so I apologize I couldn't get a video out last week. Feeling much better and hope to have this, I hope to be back in the office next week for you guys all. So I had lots of time to watch the markets this past week, so let's dive right into this week's update. So in this week's recap, it was a strong week on Wall Street despite concerns with inflation, supply chain, and other matters. So that's what we're going to look at here today. Let me go ahead and roll the intro, and then we will dive into this week's recap.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
Stocks rallied last week on a stream of positive corporate earnings surprises. The Dow Jones Industrials average rose 1.08%, while the Standard & Poor's 500 advanced 1.64%. The NASDAQ Composite Index gained 1.29% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, was up 0.23%. Fears over inflation, supply shortages, and slowing economic growth in China were pushed aside last week as investors reacted to a daily succession of positive corporate earnings surprises. After the Dow Industrials reached an all-time high intraday on Wednesday, fresh earnings reports, an increase in existing home sales, and a new pandemic low in initial jobless claims and continuing claims propelled the S&P 500 index to a new record high the following session. Disappointing earnings before the market opened on Friday hurt a few social media stocks, resulting in a choppy trading session and a sell-off in the NASDAQ to close out the week. Investors came into the earnings season anxious about whether businesses could extend the earnings growth momentum of recent quarters amid an increase in Delta infections, inflation, labor shortages, and supply chain bottlenecks. The early results were encouraging. Of the 23% of companies comprising the S&P 500 index that have reported, 84% beat Wall Street consensus earnings estimates by an average of more than 13%. The earnings season may get more uneven in coming weeks since many of the companies potentially affected by labor shortages and inflation have yet to report. Nevertheless, these better than expected earnings buoyed investor spirits and allowed stocks to build on their October gains. Remember, as always, later on today, I'll be emailing out our full economic update. If you're not getting that and would like it, head on over to our website where you can subscribe. In the update is also a tip of the week, companies reporting earnings. That section is a little bit thicker this time of year, as well as a riddle for you and a quote as well.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.